Do you want a mortgage tip? How about the number one way to make sure that you're not getting screwed when you get a mortgage? Follow along.
This is the first page of your loan estimate. This is the most important document you get at the beginning of a transaction. It's got all of the details of your transaction, your name, your property, the sales price, interest rate, monthly payment. Down here where I am, it's got your actual payment broken down. The most important thing on this document right here is your rate lock. It says no or yes. So if somebody tells you that you're locked in, that better be checked. Now listen up. This is the second page of your loan estimate. It is by far the most important document that you'll get. It's got a list, an itemization of all costs involved with the transaction. Now, when it comes to a mortgage, a lot of people think closing costs and they think mortgage company. In actuality, we make up a very small portion of the overall closing costs most of the time. So I'll walk you through it. So box A up here, that's the mortgage company's box. That's what we as a company control. Box B, appraisal, credit report fee, flood fee, things like that. Things that you can't shop for, but they're required. Box C, going to be title company surveys, things like that. You have a right to pick which company you use, but they're required for it. Government fees, homeowners insurance, prepaids, getting your escrow account set up. So all of that. Now, that being said, all of these numbers are going to be estimates, except for this box up here, okay? And we have to estimate it because we don't know what those costs are going to be at the end of the transaction, but we have to get the process started somewhere. So let's show you 3 different examples from one transaction, see how people almost get screwed. Now keep in mind, like I said, all of these numbers, they're going to be relevant because they're all going to essentially be the same at the end of the day. So we're going to go A, B, and C. So in A, $1,295 overall cost. B, $2,000 in cost. And C, $7,400 in cost. So what's the difference? Why the variation?
Shout out to Craig, the mortgage dad, for helping us break down that loan estimate. So to wrap this up, you need to make sure that you're checking what the mortgage companies are charging you in box A on page 2 of your loan estimate. You need to make sure that all 3 loan estimates that you have, the interest rate is the same and that it states that those interest rates are locked. Then you know you're comparing apples to apples.